It's Friday, the 28th of February, 2025. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories, 5 minutes. Let's go. Story number 1's a cracker. Qantas has reported a jump in its half-year profit and paid a dividend to shareholders for the first time since COVID, just as Treasurer Jim Chalmers gives the go-ahead to the Virgin-Qatar tie-up.
Qantas' share price jumped 6% yesterday on the back of increasing confidence that CEO Vanessa Hudson's turnaround plan is working. In fact, it's up about 80% over the past year, so it's done pretty well. The highlight was the performance of Jetstar. There was a 54% jump in underlying domestic earnings, helped by 8 new aircraft. Project Sunrise, that's Sydney, Melbourne to London, New York, still due to start next year. Qantas's underlying profit was up 11% to $1.4 billion for the 6 months to the end of December. The problem at Qantas at the moment, though, is a lack of investment in planes over many, many years. They're flying aging Boeing 737. There's also delays to the delivery of new aircraft. Now, Vanessa Hudson said yesterday that the company will refit more than half of its 737s, more seats, more legroom, more overhead locker space. Problem is, old planes cost more to run and generally have lower capacity.
So good day for Qantas. Qantas is on the up, just as Virgin, Sean, gets a new 25% stakeholder in Qatar and becomes a much tougher competitor in the international market.
The two announcements yesterday came within about an hour of each other. Ironic. The Qatar-Virgin tie-up will allow people to book a Virgin ticket and end up all over the place. Basically, you'll fly a Qatar Airways flight to Doha and then go on from there. The winner in all this, theoretically, is customers due to heightened competition.
Yeah, sounds good to me. All right, on to story number 2 now, Sean. Sales growth at Coles is exceeding arch rival Woolworths, though the group's half-year profit actually fell slightly.
Coles benefited from industrial action at Woolies distribution centres late last year. It said it gained about $120 million in sales. Its pre-tax earnings were up 7%, though net profit was down 3%. Better than expected all around, helped its share price jump 3.5%. Sales across its supermarkets rose 4.3%. Woolies was 2.7%. Fierce rivals, those two, so to have such a difference between them augurs well for Coles. Mind you, Leah Weckert, the CEO, said that she understood people mostly shopped, or about half of the people shopped based on locality. So all those that went to Coles because of the problems at Woolies late last year probably won't necessarily stick.
Story number 3, the Deputy Governor of the Reserve Bank, Andrew Hauser, was appearing before Senate estimates yesterday, and he said something interesting. He said that if the cash rate held steady at 4.35% for a period, inflation would be too low.
So that's why the Reserve Bank cut rates last week. But what was interesting, he said the Reserve Bank forecasts show underlying inflation will hit and stick at 2.7% throughout next year based on market pricing. Now, market pricing suggests 3 or 4 rate cuts. What he said was that the Reserve Bank doesn't want 2.7%, it wants 2.5%. Therefore, 3 or 4 rate cuts probably isn't what's going to happen. What do you read into that? Well, there are still, maybe not 3 or 4, but 2 or 3 more rate cuts in the offing. That's good news.
Yeah, it certainly is. Story number 4, global energy giant BP has dumped all premise of shifting to a green energy company, abandoning its 5-year attempt to reinvent itself and returning to oil and gas.
At least it's being honest. The company will boost spending on oil and gas by 20% to around $10 billion US a year, 15 billion Aussie, and it will cut spending on renewables by about 70%. The chief executive said it was a fundamental reset of BP's strategy. The company's ditched targets to cut fossil fuel production, and it's ditched the idea of developing 50 gigawatts of renewable power. Now, the green strategy was launched by the former CEO. It never really fully won over investors. BP will also put up for sale assets, including its lubricants arms, Castro, and a share of its solar business, Lightsource.
Finally, Sean, there is plenty obviously going on in the US at a political level, but around the breakfast table, the discussion is increasingly about the price of eggs. We're talking about $8 a dozen, or in Aussie dollar terms, that's like what, $1 an egg?
And the US Agricultural Department predicts they could jump 40% this year. So what's that, $1.40? You add on a tariff, it's about $1.70. $1.70 an egg? Wow, that's a lot of That's a lot of money. Millions of birds have been killed across the US since December as the outbreak of bird flu hit egg-laying farms from Iowa to California to North Carolina. Like in Australia, supermarkets are limiting purchases. Over there, though, restaurants are actually adding egg surcharges. Now, the Department of Agriculture wants to import 70 to 100 million eggs over the next 2 months.
All right, there we go. The top 5 business stories in 5 minutes. Thank you very much, Sean.
Thank you, Michael.
It's Friday, the 28th of February, 2025. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.